So with this most recent rebalance, again, going for, when I started, I had about a 10% allocation in Apple. Cost base was around 120. So every week money's going in and I'm just buying Apple. I'm buying Apple, and I just continue to do so with a 10% allocation. And as it took out a new all-time high and started to come back a little bit, and again, after this, we know what happened after, but like in the moment, one's up from 120 to 160. That's going to be I don't want to give like the wrong numbers, 33% return in a few months. So it's like, all right, I'm up, a significant amount. I'm going to now lower this from 10% down to 5%. And I'm going to, take some profits. And by lowering that allocation, I hit the rebalance button. M1 is going to take the allocation from 10% down to 5%. It's still going to buy it from me weekly, but it's going to continue to buy me less. But I locked in that money and I rotated it elsewhere.
Does it matter in what order you do that? Like changing the allocation and then hitting the rebalance button, or hitting the rebalance button and then changing?
You would have to hit. So if you want to like really take profits, like for me, for example, if say at this point, before I sold it, the allocation, the actual might have been, let's say 12%. So the target was 10%, but the actual was 12. And that was like before, when it was like energy was 9% and the target was 8%. And anyone would know you're overweight and they would notice that. So even though I was buying 10% of Apple a week, since it had increased, the actual allocation was 12%. So if I hit the rebalance button, it would know immediately just to take 2% off to get it back to even. But I want to take profits in it, because seeing that, it gap up, it closes, it rips back down, lower high, it's like, all right, it's up 30%, nearly vertical in this last month or two. This is kind of a gift. Let me take some off. And if it wants to go higher, amazing. If not, I'll be happy I took the profits here.
Yeah.
It continues higher, looks great. Okay, I'm a little bummed of profits, but it is what it is. Goes higher. I'm not really watching it. And now it can't, it can't continue that trend of hitting new highs.
Mm-hmm.
Go high, hits a new high. Okay, cool. But now it's starting to put in lower highs. Not a good sign. Not a good sign. And now it's starting to put in lower lows. Same thing. These are not. Now, when I start to see these, I start to see lower highs, lower lows. We're starting to test a 200-day. I'm starting to see more red flags. Lower highs, red flag, lower lows, red flag, testing 200-day red flag. And I don't have the best price in the world. That coming back to 120 is nothing out of the ordinary.
Yeah. My
cost basis was 60 or 40, a little different. I wouldn't be as cautious, but 120 isn't really that significant. So when I catch this bounce and I'm seeing the same thing, we're seeing kind of these little bounce and these rollovers. It's like, let me just take this gain while I can. And that's when, at this point, again, still 5%. It's like, I don't want to sell Apple completely. So I'm going to take the money off the table. I'll keep the 1% allocation. And if it comes back to 120 or lower, then I'll start to up it back to 2% and then 3% and then 4% and 5%.
Yeah.
And maybe it can, and my assumption or thought is it, does this, it starts to base, and that's when you start to increase the allocation. And then when it gets back up here again in a year or 6 months or whatever that time may be, I then start to lower the allocation again. And that was something that, like for like Etsy and CRM, this was like another example where for me with Etsy, my cost basis was pretty much like 170 over the past year. So I was buying it with a 10% allocation. And I'm buying it and buying every single week. I'm not even looking at it. I'm just buying it. I'm buying it. And all I want to do is when it starts to break out, this is when I want to start to think to take some profits. So, this is we're going to say 170 to the retest is, I think it's like 60%. And what I'm saying that the percentages is that I'm always trying to focus on like at least 50% of a gain in a name before I'm looking to rebalance. Now with Apple, again, it's 30%. So it's not gonna make a hard line in the sand because you have to like take what you can take. But that's kind of the mentality of like, if I can hold this name, again, if I'm making 50% in 6 months, that's a crazy return relative to the market. So this was, where I sold, this was a 60% gain. So in this same example, it was, I had 10%, 10%, 10%, the whole way up. I didn't take profits initially, but I wanted to just be more patient with it. Again, if taking an all-time high, it's probably going to head higher. It starts to head higher, looks amazing. Up here, I'm probably up close to 80%, 76%. So at its peak, I was up, we'll call it 75. And as it now starts to roll over, okay, now I want to lower that allocation from, down to whatever, if it was 15% or whatever it was, I'm lowering it back down to 5.
Okay.
I'm locking in that 50% gain, and I want to put the money elsewhere.
Yeah.
And in hindsight, now with a lot of these, it's easy to say, I should have dropped this to 1, I should have dropped CRM to 1, I should have dropped Shopify 1. It's easy to say that, but in reality, no one, myself included, was expecting it to fully reverse. But this is one of those examples where up here, I was not expecting Etsy to come below my average price. I was like, no, there's no way it's going to happen. And that was kind of like with Apple, it's like, I don't think that's going to happen either. But it happened with 9 of these names. Why not? Why could it not happen with Apple? So that's why I was more aggressive this time around and lowering it back down to 1. And when I did sell Apple, I now started to buy back to Etsy at a lower cost basis, but kind of, if you can kind of see, it's like I'm kind of buying near, if you can call it like the support area, and I'm trying to sell near like the major resistance area. That's the game that I'm playing. I want to buy near major support. You're kind of buying into weakness at times, increasing it on the way up. And then when it looks amazing, everyone loves it. Everyone wants to buy that breakout. From a short-term trading standpoint, now I want to start to be more defensive, and I want to be ready to take those profits when the rollover starts. And if Etsy wants to trade in this range from 100 to 300, this is a huge range to trade in. This could still base out between 160 and 100 for a year if I wanted to, go to 80, shake everybody out, and then grind back up to 300. But that, these percentages is it's a big move. So, took some money off the table up here, I'm willing to now start increasing it. So, okay, now it was 5%. Now I'm at 6%. And I'm back to buying. And then it'll keep setting up. And now I have to wait until the next name I can rebalance. Because there's none of these names, I'm pretty much under the water in all of them. I can't rebalance Mitch. I can't rebalance CRM. Again, I added a little bit to this one as well. But it was just like with Etsy CRM, Bob, but these were all names that when I was taking profits at Apple, I was adding like 1% to each of them to start to buy them again. And that's where you are kind of forced to take profits when you don't want to and buy back the worst names. And if they're names you can stick with and you believe in, you'll have a little more conviction when it looks the bleakest, like when it looks horrible.
Yeah.
That's when you're going to get the best bang for your buck, knowing that it might be a year before I can take advantage of this painful short-term opportunity. And that's something like for, when I did this with Apple on this day, when I sold it, I increased the Etsy allocation, I increased CRM allocation, I increased the Baba allocation, which of course was like a day or two too early to like catch the perfect, but we're never going to do that anyways. But it's like bought it here, got smoked. Now it's a buying price, but we're still might not be out of the woods with like a name like Baba. But me buying it down here at 90, $100, I don't plan on selling it until it gets back to this 300 area.
Okay.
So a 300% return, even though that took 5 years, that's still a crazy average yearly return to do that. So that's like when you see in a lot of these examples, I'm trying to buy near major support, I'm trying to sell near major resistance. And of course, right now they're pretty much all near major support. And that's why the weekly savings aspect is key, because even though we can't rebalance with the weekly stuff, we can still keep buying every single week. And that's where, if this does take a year or 2 years, I'll be buying at little bits, little drips and drabs every single week until it starts to turn around. And even if it has to go lower, I keep buying, and I keep slowly like improving that cost basis. And then with time, if the name is, going to turn around, then it starts to, you keep buying, and then we start to switch it to selling. We start lowering that target. We start hitting the rebalance button. And then we keep repeating that, like that big wave, where the swing trading, it's like these little waves that we're trying to catch. These ones are like those bigger waves that they're just it's not going to be, we're not going to get that immediate gratification. It's going to be much more like a long-term relationship than like a first date type of thing.
Okay.
So hopefully this makes it a little more visual. And
oh, absolutely. No, that was really helpful. Thank you. One of my concerns is I'm actually gonna have to like drop down my contributions significantly, just because I'm gonna be paying, like in a couple months, I'm gonna be paying almost double in rent what I'm paying right now. And so like after looking at everything, like there's just no feasible way other than like cutting back on what I'm saving monthly.